everyone, this is KT here. So today this video is about the trades being placed for the week of April 21st to April 25, 2025. So let's take a look first at the watch list where the market closes to see a screenshot or rather the status of the stocks that I have in my portfolio. So the market closes, VIX is down, which means that it's bullish generally. And the stocks that are in my portfolio are showing green with earnings release next week. So I'm quite bullish about the stocks that I have on hand now, which means there are more opportunities for executing more trades like rolling off the options or selling more puts. Okay, let's take a look at the trades that is in place for the week. So started the week with buying puts for TSM, expiring May 2nd, 2025 at 150. Because on Monday, market was going downwards and throughout the week, it actually became overly bullish. So on Monday itself, the sentiment that the market is going to crash even further or going into a more bearish price momentum. So I bought puts to increase my accessibility to ensure that my positions are not closed. Next, AMD. AMD, bought the calls for May 2nd at $96 and I roll it forward May 9 at $96, earning a credit of about 1.16. So the trades here were being placed because I was monitoring the price action to see which leg of the trades to be placed will get me a better premium. It has to do with the price action, like as you know that the stock price is fluctuating. So there's two legs involving here. Hence, you'll be more advantage to monitor the price action of AMD. Example, if you were to sell put when the strike price is closer to the market price, then your premiums will be higher. So next, roll the 157.5 puts for TSM to May 16, getting a premium of 1.6 credit. Uh, Next, sold calls for TSM 157.5, getting a credit of 0.49. In the meantime, bought more puts for MU, expiring May 2nd, 2025 at $66. A debit of 3.25. MU also sold puts for MU at $64, gaining the credit of 1.39. Bought more puts for SoFi at $10.50 to hedge my positions at a debit of 0.33. And bought even more puts for SoFi at 0.38 because market was going downwards, just to buy more puts to hedge to gain more accessibility. Okay, so sold my TSM puts to gain a credit of 4.4 as I noticed that market is going upwards. Next, bought back my uh, calls here because I don't want to let my TSM stock get caught away as market is going to be bullish, and 157.5 was not my break-even price. So there's a debit of 3.65. So roll my AMD calls to May 16, gaining a premium of 0.6. And I sold more calls for TSM at 185, expiring May 30, because TSM is going upwards, more towards a bullish position, and hence the market price is going nearer to the strike price. So at this time, selling more calls here, selling calls at this moment where the market price is closer to the strike price will net me a better premium. So there's a credit of 0.75. As market is going outwards, sold more puts at 10.5 here to close the position to gain that credit of 0.02. Sold puts 10.5 at 0.01 also. Next, decided to sell calls at $30 strike price, and with that premium, close my existing positions for the calls that I sold at $50 strike price. So gaining slightly a positive here because as I mentioned, the VIX is mean reverting. So now it's dropping towards the mean from 50, drop all the way to 30 at the moment. So I decided to close the $50 cost. It's has already expired, it's already uh, achieved more than 50% of the extrinsic value. So this is like a sure win bet for this. Bought more puts for SoFi at $10 to hedge my position. Next, um, sold Pfizer at $22, expiring May 2nd, because Pfizer earnings are coming. I'm bullish about it. And then I also mentioned that Pfizer is quite a relatively stable stock throughout this whole tariff saga. It didn't drop more than 20 to 30%. So I'm quite confident to hold this stock, even though if, let's say, next week Pfizer's stock price drops below $22. So got a premium of 0.25. Just nice is more than 1%. Okay. Next, sold more Pfizer puts, and MU sold more puts out of the money because I see that MU is going upwards, and also it's quite a good trade where it's 0.75 credit for $75 strike price, which is the 1%. And over the week, my puts expired, so ripping the premiums that I have gotten by selling these puts. Yeah, so I think that's all for now. Next week is going to be exciting because the market is bullish. So my portfolio is actually positioned for bullish price action. Hence, it'll be quite interesting to see what's for next week and what trades to execute. So I think that's all for now. Remember to like this YouTube video and also like this YouTube channel and turn on your notification bell. That's all. Have a great day. Signing off here.